Good morning. I hope everyone can listen. Thank you. Welcome, everyone. I'm confident that you are enjoying this beautiful environment here in Expo. My name is HOMAYUN HABIB. I'm a chartered wealth manager based in London. But today I'm standing here as executive chairman of Future FX. And I was given this topic to present in front of you global market affairs and the current trend. So when I was given this topic, basically I was a little bit confused that there is nothing specific. It's like more general terms, Then while I was preparing, I said rather than making it too complicated, I'll keep it simple. I'll basically outline my personal experience in this market, starting as a junior trader in 2006, and now I'm working as a chartered wealth manager. So at the time when I started my career in 2006, when we used to visit any FX broker's website or platform, we used to basically see this kind of disclaimer. The 70% people lose money on our platform, 80% people lose money on our platform, in some cases 87%. So as a junior trader, we used to be scared. What is going on in this market? Why so many people losing money? There's something different in this market, because in stock market is not like this. So what is there? What is different in there? So we used to talk, we used to come up with the reason, we used to think that, look, stock market around for about 200 years, but Forex market since late 90s. So probably people are not adapting, people are new to this market, that's why probably they're losing money. That could be the reason. But that was then in 2006. The problem I have is, even today, if you visit any recognized broker, FCA regulated or ASIC regulated, SISEC regulated, legally they have to provide this kind of disclaimer. And you still see similar sort of percentage in there. 67% people losing money, 80% retail trader losing money. So the question we got to ask ourselves, what happened in last 15, 16 years? That there is nothing, literally there is no changes, So this is kind of horror story to me. When I look at these figures, I get shocked. Then what is happening? So then I realized to present some statistical analysis. When I look at this, see in 2006, the global Forex market on a daily basis, it used to be about 2.3 trillion a day, the daily volume. But as of last week, according to CFTC, the CFTC is basically the Commodities and Future Trading Commission based in Chicago. According to their figure, last week, on average, every day, it was $8.6 trillion a day. So we have made huge progress, okay? Then participants, in 2005-06, around 29-30 million active traders were involved in this market, both institutional and retail. Now, we have over 400 million traders or people directly or indirectly involved with this market. It's a huge progress. In 2005-06, there was only about 40 plus jurisdiction where Forex was allowed legally. You could trade from those countries. Now we have over 120 plus jurisdiction. So the market have expanded in big way. Then comes Forex training. In 2005-06, even YouTube was new. When I used to go to YouTube, I used to search what is Forex, how is it? Hardly there was any video. But now, moment you type F in YouTube, it comes Forex, nothing else, okay? There are millions of coaches, millions of teachers, millions of videos. We are trying to educate our traders. But the problem we have made all this progress in the last 15, 16 years, but still people losing money. Still 70, 80% retail traders are losing money. So we got to ask ourselves, there are something fundamentally wrong in this market. Something so big that it is not fixable, or we are not trying to fix. That's why we are not able to change the figures, because these are most up-to-date figure based on CFTC. But the brokers, they're still giving those disclaimers. The 70%, 80% trade are losing money. So what is wrong in this market? So I talked to a couple of my strategists, my desk analysts, and we have come up with, we didn't try to make things too complicated, but to keep things simple. We have come up with 2-3 major issues which we as an industry need to improve in order for this market to be sustained for the long run. Number one is education. In my opinion, almost 100% retail traders, when they enter into this market, they do not have proper education. When we say education, we don't mean this. This is not education. Anybody can do these things. 5-year-old kids can draw those charts, candlestick, then FIBO, all these things. This is not education. When we say education, what do we mean by that? Education means, do you understand how economy works? Did you study finance? Do you know how economy impact market? How a country's GDP, inflation, trade balance affects its currency? Why central bank increase the interest rate? And when they increase the interest rate, how it affects its currencies? Do you know those factors? Because these are 95% of the market. This thing is only 5%. It only helps you to get the entry and exit. It doesn't give you trend. It doesn't give you strategy. Your strategy has to be based on economics. For example, the way we traded during 2005-06, we did not trade the same way during 2008-09. Why? Because it was different market. But if your education is limited to these things, then you would be trading on the same way. But market has changed. And that brings the second issues. So first issue always the education. Second issue, in our opinion, is adapting to the new environment. I know a lot of traders. They studied finance, they had good degree, they went through even CISI, but they work for themselves only. But they cannot adapt themselves to the new market environment. And this is the problem. So for example, let me give you an example. Let's say during COVID crisis, okay? Almost all the major central banks in the world, they flooded the world with cheap money. In fact, last 2 years, the number of $100 notes Federal Reserve printed, it is the 40% of the money was printed for all time. Now imagine how much money they were printing during last COVID crisis. So when we have this much of cheap money coming to the system, it's bound to create some inflation, which we are facing now all over the world. So what we did during COVID crisis? Too much money, not enough assets. So money went to crypto, money went to gold. Everybody was buying gold because it bound to create some inflation. So I need to hedge myself against this inflation. So I was buying gold. Everybody was buying gold. So gold was going up to 2100. But now it's a different environment. They're tightening their belt. They're increasing the rate. In fact, by year end, we are expecting 4.5% to be the Fed fund rate. So in this high inflationary environment, we cannot buy gold because they are tightening the belt. The interest is going up. So what do? We need to sell gold. But what retailers are doing? In fact, in my platform, if I have, just to give you a flavor, if I have 100 retail traders, 95% of them buying gold. And I just look at, what are you doing? They have no education. They don't know what is going on in the market. All they see, oh, gold came down too much, it has to go up. This is gambling. This is not trading. And we, brokers, managers, institutions, as an industry, we are even responsible for this because we are producing all these fake coaches, all these fake coaches who just, like there is millions of fake coaches in the YouTube platform. So what they have done, what they have achieved in their life, you ask them that if you have a secret strategy, if I have a secret strategy, why should I share with you? Why should I tell you my secret strategy? I should be using it to make money for myself. So they're coming on YouTube, oh, my strategy will make you 10% every day. My strategy will make you 20% a month. And the ordinary retail trader are falling for it. And we know the result. Rest are history. So we as an industry, we have responsibility to educate our traders. The third issues which I want to outline is the technology. See, we know about education now, adapting to the new market environments. I think technology is one of the big factors because the technology we institutional traders or strategists we use, the retail trader do not have access to it. Okay? When a retail trader, they place trade based on this candlestick. Because when you go to MT5 or any broker's their own platform or MT4, what do you see? 3 types of chart: line chart, bar chart, and candlestick. Okay? But if you are involved or if you have friends, colleagues who works for institution, you ask them, they don't follow those things. It's not in their handbook. In fact, they follow this. They follow this. Okay? We call it footprints. Because I want to show you an example. Why do they follow this? Okay? See, in Dubai, I'm here since beginning of August, almost 2 months, 2.5 months. Okay? When I came in, I was talking to some of my strategists and analysts and traders here, and gold was at that level, around 1820, 25 level, So I was telling them, you know what? You need to sell gold. And we see the Fed fund rate going up sharper than we expected. Bank of England raising interest. ECB will be forced to raise interest. So it's a high inflationary environment. Interest rate has to go up. No other choice other than selling gold. And I was told, you know what? We don't think so. Then I told them, you know what? Look at this. Look at this sale order against the buy order. So these are the sale contract and these are the buy contract, okay? So I placed a big sale order over 1,000 lot based on these figures, these institutional contracts, okay? But initially it did not reflect. I could see that when this kind of big orders come to the system, it bound to have some effect. Because if you see the difference, 97 against 11, 84 against 12, 95 against 19, it's a big difference. But initially, first couple of days, I was even confused that why there is no effect of this. Then we did a little bit more research. What we came up with, that big institutional liquidity provider, they did not pass those trade to the market. They held on to themselves. But then we did more research. You know what? Even if they hold it, how long they can hold it? Because there will be more. Because if these institutions are placing sell orders, there will be more coming, So first couple of days it was going up, okay? Then more bigger and bigger sell orders start coming in. And eventually, rest are, you can see, today we are trading around 1620. Our aim is that once is break below 1620, next target is 1530. So the point I'm trying to make here is, we were able to place those trades based on footprints, not based on candlestick. Okay. So as a institution, as a FX broker, how can we help our traders to learn those, to get them educated on those things? So that's why we are spending a fortune to develop our own platform, which we name New Generation 3, okay? Which will be launching very soon. We don't have launch date yet, but very soon we'll be launching this one. And this platform will have one additional extra feature, which I would say almost no other platform has. Like every platform, they have 3 types of chart. As I say, bar chart, line chart, and candlestick. We will have footprint chart integrated, which will be real-time, live. Not for all pairs, because initially it will be selected pairs only, because we are working on it, we are trying to modify it. So as we make progress, there will be, our aim is within the year, almost all the pairs, all commodities, and their live footprint, along with supply, demand, and order flow. So that instead of using line chart, bar chart, where basically you see nothing, it's just a line moving, you know. But when you trade based on footprints, you basically see the numbers. Is the numbers behind candlestick, which affects the candlestick. You can make much more informed decision. So this is our aim. Now, this platform has many other functionality. It will have integrated social trading. You do not need to go to MT5 to place your trade. You can directly place your trade from this platform. You can directly deposit from this platform. You can connect to any trader, not only trader, you can connect to even with a different brokerage account. So let's say your account with us, but you want to follow someone else's in some other brokers. You can do this. No other social trading platform offering these things, but we will be doing these things. So we are working on it. Very soon, we'll be launching this. So to summarize my short presentation, as I told you that I have come up with 3 problems for our retail audience. Number 1 was education. They don't have the right education. I think as an institution, as a broker, as a platform, we have much more to do to educate our traders. And we need to work on this together for a sustainable future. Second thing is, let's invest in our platform. Because as you know, the platform in United States and Canada, the iOS, they already stopped metacodes. You can't download MT5, MT4 in those countries. What are the guarantees that Android not going to ban tomorrow? What are the guarantees that you will have MT4, MT5 available in, let's say, in India next year? RBI could come up with some legislation. This is going to ban MT4, MT5. Then what do we do as a broker? How do we run our business? So we need to start preparing ourselves, and we need to invest money for our own platform and invest money in a way so that we can come up with some new technology, not just day-to-day stuff, but try to invest in something new which will be beneficial for our retail audience. Thank you very much. I want to stop here. Obviously, our next speaker is waiting. But if you have any brief 1 or 2 questions, I'm more than happy to take it. Thank you.